JT. Looks like we got another live earnings
I
call
will now
stream this
turn the
morning.
conference over to Christine Petralia, Investor Relations for Unusual Machines. Christine, over to you.
Thank you, operator. Good morning, everyone. With us today are Unusual Machines CEO Alan Evans and CFO Brian Hoff. During this call, management will make forward-looking statements regarding our expectations for product demand, revenue growth, manufacturing expansion, gross margins, and anticipated regulatory developments. Actual results may differ materially due to factors including government program funding and timing, customer concentration, inventory risks, manufacturing challenges, supply chain disruptions, tariff impacts, and other risks described in our Form 10-K for the year ended December 31, 2025. We undertake no obligation to update forward-looking statements except as required by law. For a complete discussion of risk factors, please refer to our SEC filings and the shareholder letter accompanying this call. In addition to reporting financial results in accordance with GAAP, we will discuss certain non-GAAP financial measures, including adjusted EBITDA. We believe these measures provide useful supplemental information to investors regarding our operating performance. A reconciliation of non-GAAP measures to the most directly comparable GAAP measures is included in the shareholder letter earnings press release, which are also available on our website and filed with the SEC. As a reminder, this call is being recorded and a replay will be available on Unusual Machines website at www.unusualmachines.com. Now, let me hand over the call to our CEO, Alan Evans. Please go ahead, Alan.
Thank you, Christine. Good morning, everyone, and thank you for joining us today. During this call, I will discuss our second quarter 2026 performance. In the second quarter, we generated more than $16.7 million in operating revenue. This is a 687% year-over-year growth from the second quarter in 2025, and it's more than double the revenue we generated last quarter, the first quarter of 2026. We generated a GAAP loss of approximately $7.8 million for the quarter, which represents a net loss of 16 cents per share, and that's a reduction in loss when compared to the 32 cents per share from the second quarter of 2025. The key takeaway from this quarter for me is that we are continuing to dramatically increase revenue while getting closer to consistent profitability. The Q2 results begin to reflect the underlying financial structure Unusual Machines is working to achieve. There is rapid continued growth, doubling to almost $17 million in revenue, with the growth driven entirely from our enterprise segment. At the same time, we've managed to reduce our non-GAAP adjusted EBITDA from a loss of $1.6 million last quarter to a loss of only $400,000 this quarter. Our margins have remained consistent and healthy with the slightly lower than target depression that we see from rapid growth, and we finished the quarter with a 34.7% gross margin. This is in that backdrop of scaling, as our headcount went from 141 employees to 240 employees as of July 1st. A healthy balance sheet remains a priority for us, and we took the opportunity to raise another $60 million at $30 a share, and we did this with block ATM transactions. Right now, we have about $367.5 million in total working capital and no debt. It's very important to remember that we don't burn cash, so this money remains in the war chest and enables us to both manage inventory and make investments that accelerate our customers and the entire drone marketplace. The success of this quarter and of the company just would not be possible without the hard work everyone on the entire Unusual Machines team puts in. Everybody works hard and brings incredible energy to all of the challenges we face. I am confident we can handle continued growth because I am confident in everyone I have the pleasure of working with. So I want to say thank you to everyone working at Unusual Machines. I'll hand this call off to our CFO, Brian Hoff, to cover our financial results in detail, And then once he finishes, I'm going to go into more detail on both this quarter and our plans going forward. With that, I'm handing the call off to our CFO, Brian Hoff.
Thank you, Alan, and thank you everyone for joining the call. As Alan just mentioned, we've had another strong quarter with $16.7 million recognized in revenue for the quarter, which, as he said, is 687% increase from the prior year and 107% increase from the prior quarter.
Wow.
That puts us at revenue year to date at $24.8 million.
Nice.
And we continue to see this significant shift toward enterprise revenue. About approximately 95% of our second quarter revenue was generated from enterprise customers, which is across a diverse base of customers and products. Gross margin was 34.7% for the quarter, which is an increase from last quarter and slightly below our 2025 margins. We expect to continue to see these margin fluctuations as we can scale our manufacturing and work to capture the market demand. We anticipate additional margin fluctuation for the remainder of 2026, primarily related to our growth initiatives. However, we expect them to kind of continue to recover. Our operating expenses also increased during the quarter to $13.6 million for Q2 of 26. This increase reflects deliberate investments and strategic decisions to support our continued growth and scale of our business. Things that are including of building out our G&A infrastructure, headcount, systems, process. Including it is also $5.7 million in non-cash stock compensation expense and about $1.8 million in non-recurring expenses. We continue to expect additional operating expenses as we continue to hire additional staff, add additional manufacturing space, and have additional public company-related expenses. Please reference the tables at the end of the shareholder letter for the additional detail, which reflects our adjusted EBITDA. As Alan said, we've brought this down from about $1.6 million in Q1 to
take a look at the slide
about
deck at the end,
$400,000
guys.
in Q2, so showing very positive trends. In other income and expense, we had additional positive results from our investments. These investments are designed for strategic purposes, and they create goodwill in the U.S. drone industry and develop supplier partnerships and customer relationships. Our strategy is continuing to work. The results show a $2.3 million realized gain from investments during the quarter, which is a nice add-on to our overall cash without adding additional dilution. We also had interest income of about $1.8 million during the quarter.
Nice.
Our balance sheet also remains very strong and reflects our focus on positioning for anticipated growth. Our cash balance ended the quarter at $229 million, which included the $60 million from our ATM block funding in May at $30 a share. The balance sheet is also further supported by our short-term investments of over $86 million, and inventory, which includes raw materials and finished goods, and deposits paid of about $42.4 million. And we're going to see this continue to increase in Q3 and Q4 as we can make significant purchases to meet demand and do our part in managing supply chain issues as much as possible. Our total working capital is over $367 million, which puts us in a great position to capitalize on demand moving forward. I'd also like to reiterate what Alan just said. None of this is possible without the fantastic team working extremely hard to make things move. It's an exciting time to be at Unusual Machines and looking forward to the rest of the year. Thank you to our shareholders and partners for continuing to support our mission throughout it all. Back to Alan.
Thanks, Brian. At a high level, it's been an impressive quarter. We keep scaling both sales and company size. We maintain a strong cash position. We've added product categories through activities like the Upgrade Energy acquisition, and we've been able to achieve these results while reducing our operating losses. We believe we remain well positioned to be a supply chain leader for components for small drones as the domestic industry expands. I'm about to go into a lot more detail on the second quarter and also discuss our outlook going forward. I'd like to remind everyone that my comments coming forward from here definitely contain forward-looking statements and actual results.
I think we may have gotten a
differ
dilution
from
event
those
in the
anticipated.
shareholder letter they sent out.
Quarter
Right.
two. The second quarter is worth talking about
There's
in
a lot of
more
scaling going
detail.
on right now.
The second quarter
Yeah.
is the moment where
Makes
I've
sense.
gone from hoping we could be a major supplier in the emerging drone industry to believing that we will be. Two major threads emerged in the second quarter that are not going to show up in the financial statements, but are really core to Unusual Machines' ability to effectively grow forward and be a larger company. The first was a supply chain issue. During the quarter, we outgrew one of our electronics vendors, and we had to work through challenging supply chain challenges as we replaced different components and where we got parts as we still fulfilled products for our customers. Our sales and operations team did an incredible job of navigating this and putting in the extra hours and working with customers. And
Thanks,
I could
Rob.
not be more proud of those teams and how they handled what was this really challenging situation to deliver for our customers and keep our business on track. The second challenge was that we had a quality issue with one of our motor SKUs. There was this intermittent issue that required deep coordination with our product team, our motor production team, and our customers to go in and find the root cause of the intermittent challenge. They then had to go through and create remedies to our production processes, as well as new ways to do quality testing to eliminate the issue from everything we're doing going forward. These two challenges are both pretty normal types of issues for a company like ours at scale. They should be expected. But this is really the first time that we've faced either one of these types of challenges at this scale. At the same time, they both showed up simultaneously. Either one of these operating issues could have easily been used to justify a flat quarter, could have easily derailed what we were doing or slowed it down. Our team members could have treated this as routine. They could have not put in the 10 to 12-hour days and worked the long hours required to be sure our customers were in the best place they could be. They didn't. Watching everyone, and I mean everyone involved, work through these challenges and still deliver the kind of growth we've seen and the margins that we've seen has me fully believing that we have the team and the mindset to be successful as we continue to grow. I absolutely believe in the team we have and what we are continuing to build. That's probably enough on the second quarter, but I think it's important for everyone to understand that as it doesn't show up. So now let's talk about the future. First and foremost, demand remains strong. The current U.S. marketplace remains very supply constrained, and we still see demand outstripping supply.
All right,
this
let's
year
get a quick, do a quick pause there. So, a lot going on here. We had an offering here, a little bit above the money, $60 million at 30 a share. We knew a dilution event at some point was coming. I kind of thought that they were going to wait till 35, and I'm surprised they actually didn't dilute at 35 when it was, you know, up there after that one day 60% intraday move, which is pretty crazy. So yeah, we did get a dilution event above the money, which is reflecting, you know, in the about 4% down with a nice bump up. On the sheet there, we saw, I think, 676% increase year over year in revenue. And also, welcome to everyone, Zero Group Army, HGR, investing people. Enjoy. Good morning. It's early. I'm not on the East Coast, so yeah. I'm trying to quantify my thoughts here. I'm just like, okay, try to listen to the call. But yeah, we just paused it quick, so we're not going to miss anything. Don't worry about that. Alan Evans is bringing us through everything. Obviously, we're going to have a lot of growth in the drone sector. Components are going to be needed. So it looks like there's a couple of road bumps, but nothing that I'm concerned about yet. We'll go over the full, you know, letter and any slides we can find after the fact too. So I'm going to resume the call. Benny, any thoughts that you had so far about the call?
No, you know, I mean, with these emerging companies like this, I mean, it's nice to know and have these kind of share raises dilution events put to a vote, and they kind of get priced in ahead of these things. Sometimes you can't blame the company for taking advantage of a nice run or push to improve the balance sheet, and help out with just sort of being having that money necessary to sort of protect themselves, or in case of a downturn or something like that. But in the case of unusual machines, they're already hitting on all cylinders and just trying to, every time the phone rings, it's we need more, we need more, right? And so it takes money to make money, and to set up at one production scaled rate, and then a quarter later realize that that demand is only accelerating, and you have to scale up to meet that demand. It requires cash in a lot of ways for those kind of production expanses. Making the commitments needed to improve margins on the supply chain side of the inputs and all. You don't get the best prices if you're just buying a little bit at a time, and there's just so much that fits into it, from that aspect to just the pure square footage of space and number of people you got to hire up, and get those teams built out and ready. So there's a lot of expenses. The great thing is that right now, it seems that with so much coming together from the government and the investors and financing side of things, along with the innovators and the entrepreneurs meeting this moment, that this is to be expected. So I'm interested in hearing more about what management has to say about the justifications and the plans for the money and that kind of thing. And look, I'm disappointed to not know about it ahead of time. To not get a chance to vote on it. As shareholders, sometimes that can be a tough pill to swallow. But I'll reserve judgment till I know a little bit more than the headline.
Exactly. And with these, high beta growth stocks, dilution is always on the table. I mean, look at the year-to-date chart. We're up over 100% at highs. We were up, I think, over 140% year to date. So, I mean, if you're a
Yeah.
shareholder with UMAC, and you got in kind of in January or before, you're pretty happy, I think, right now with
Yeah.
general
Yeah.
share price. But obviously, any kind of dilution is not fun, right? You're getting diluted. So, as a
Right.
shareholder, we don't like to see that, but it's about the
But
growth story. Um,
But hey,
action.
I got to point out, and I hate to interrupt you there.
Oh, you're
I know
good.
you're gonna move on with something really good and cool to say. But hey, we're in a market, folks. I mean, there's big boys playing. You saw what just happened to the young man with $28 billion or whatever it was, and playing games with Citadel and whatnot. So. On runs like this, listen to Hidden Gems research, the wave strategy, sell a few calls, make a hedge. That's what the smart money does on a bigger scale, and it's no reason we can't do it down here at retail levels either, right? So,
Absolutely.
the investors in UMAC that went ahead and sold a few calls, or put some hedges in place here ahead of time, or as they watched a little run here, just knowing we've got this kind of volatility, and the way the market seems really schizophrenic here at times, with so much going on, and so much happening, so much uncertainty. Um, I just wanted to point that out there, because we do have some followers and some folks we respect that are doing exactly that kind of thing with it. So it
Heck
is a
yeah.
buyer beware out there to an extent, but I haven't seen anything yet to not trust Alan and the gang with what they're doing there at Unusual Machines.
Absolutely. I mean, they've been running it, and I love the insight there. Hedge, hedge, hedge. If you run 100% year to date, yeah, covered calls. Make sure that you have an exit strategy. Obviously, with HUMAC, I'm a long-term holder. I believe in the story long-term. So, I got some portfolios for long holds, some for hedging with options. It's always good to just be diversified, hedge, all of that for sure. If any of y'all in the 0 Hour Group Army can find the slide deck, we'd appreciate it. I'm on their website. They only have stuff from May 2026. I'm not seeing it
Oh
on
yeah.
their other live webcasts. So if any of you guys are deep diving or already have their slide deck in hand, don't be afraid to put it in the chat or say where you got it, because I want to look at that after. Well, yeah, let's get back to the
Probably
call.
it's probably in high demand here. You know, there's a lot of folks watching Unusual Machines. They're right in the center of this whole industry build out and coming of age story right now. So yeah, really looking forward to it. This is our second earnings call with Unusual Machines, is it not?
I think so. Yeah. I think it's
Awesome.
live.
Yeah.
Yeah.
Yeah. So yeah, carried live with reactions and analysis, folks. We really appreciate everyone tuning in. I hope we make it worth your time. Here we go.
Here we go.
To 2027. We are continuing to build the company and procure raw material to grow into this demand as fast as we possibly can, and we don't see any signs of softness now or in the near future. The primary driver of this demand growth continues to be the Department of War. The Drone Dominance Gauntlet program remains on track as Phase 2 is currently in the final selection process, and more than 60,000 drones are expected to be ordered in the second half of 2026, mostly in the fourth quarter. The NDAA continues to move forward through legislation with big increases in spending for autonomous systems. And in addition to that, there are drone programs and counter-drone orders for the same parts. That counter-drone is really becoming another emergent addressable market segment that's creating immediate and near-term demand. There have also been orders that have been propagating through the sort of Department of War procurement process. And I just want to give some examples. There was a $90 million counter-UAS order for Power US. There was $500 million in counter-UAS from AeroVironment, $500 million in counter-UAS orders from Perennial Autonomy, a $500 million IDIQ for FPV drones from Neros, which is an extension of the PBAS program, and very recently an $820 million loan from the OSC to PDW. These and other orders are really just starting to propagate through the supply chain, and we expect that they're going to create additional demand here in late Q3 and Q4 and then into 2027. So one thing we did learn in the second quarter is that we do not yet have the infrastructure to support hundreds of millions or billions of dollars in annual revenue. The massive amount of money flowing into the drone marketplace is coming faster and is larger than we anticipated.
That's a
And
bottleneck
we're
we got to
in the
fix.
middle of transforming Unusual Machines, and we now very strongly believe that we only have until the end of the third quarter to complete this transformation because of this demand wave. Our high-speed motor production line is just in the process of being installed. The components are in Florida, and it's going to take some time to bring that online. Our HR team is very busy in California, even this week, actively working on helping upgrade energy, hire people, scale their team and process, and prepare for integration into the Unusual Machines greater umbrella, even though we're not going to see any revenue from that acquisition in this quarter until we close. Our supply chain team is working closely with them to drive battery vendors and work on bringing in the cells and the material. And that is a long-term endeavor in terms of transitioning and qualifying new electronics providers. And these are all to address some of the challenges we had in the second quarter and are a ton of work that we're setting up for the long-term future. These activities, all of this work, will not show up in the top line for the third quarter. But this is the work that positions us to continue our dramatic growth during the fourth quarter and into 2027 as this massive demand wave starts to fully manifest.
Might see a pullback into
To
Q4
summarize,
then a
the
huge
second quarter of
uptick.
2026 showed strong results despite operating challenges. We doubled revenue to almost $17 million and reduced our adjusted EBITDA loss to $400,000. We continued our staircase financing strategy, and we're now focused on building a strong foundation with the industry through the end of 26 and into 2027. Unusual Machines remains at the forefront of the domestic components market, and the market is growing in a way never anticipated, with additional demand from counter-drone pushing things even faster. Our business is well capitalized and healthy, and we're continuing to grow as fast as we possibly can. And I am now confident and believe that our team is positioned to meet this demand. I want to say thank you again to our entire staff and to all of our shareholders who are part of this with us. And with that, I would like to open up the call to questions.
Thank you very much. We are now open.
Bit of a quick call today.
Questions. If you would like to ask a question, please press star one on your phone keypad now. We ask that while you're posing your question, you please pick up your handset if you are listening on a speakerphone to provide optimum sound quality. So star one for questions. Please wait a moment whilst we poll for questions. Thank you. Our first question is coming from Austin Bollig of Needham & Company. Austin, your line is live.
Hello, Austin.
Thanks, guys, for taking my question, and congrats on the great results. First, Alan, just wanted to kind of dive a little bit more into kind of the revenue outlook for the rest of the year. I think prior, you guys were talking about trying to grow internally 50% quarter over quarter, understanding this is at a much larger base. Is the plan to still try and grow sequentially throughout the year?
Austin, appreciate your question. We don't historically give guidance. I think I'm going to give you what our internal targets are and why here. And, this is a unique situation. In the second quarter, we ran in front of our inventory a little bit. So we have some shortages as we go through the changeover to different electronics vendors. And we also, honestly, our motor factory right now is a construction zone, and we're prioritized putting in our high-speed line. So our internal targets, which are not the same as guidance, these are sort of where we really work toward, and we've done a good job of this historically. Internally, because of all the efforts we're putting in, we're targeting $12 to $14 million in the third quarter, and then that positions us to go after our internal target of $25 million for the fourth quarter. So those are our internal targets, and we're really spending this quarter rushing to build out everything to start to meet what will be drone dominance and the counter drone demand coming in the fourth quarter. And so we're applying a lot of work, not toward building and selling, but to positioning to start to explode into quarter four and the time after that.
I'm going to pause it for a second.
Perfect.
We don't give guidance, but he just said explode.
Yeah, he said it, yeah.
All right.
Expect a pretty quiet third
right,
quarter.
Back up to Dave if you want.
I do a fourth quarter that's 4 times the size in revenue.
Yeah.
Man, yeah. I mean the demand is there. Looks like the bottleneck is just materials, making sure they have everything. The third quarter may be kind of the quarter to get all the ducks in a row per se, and then make sure that we're ready to produce in the fourth. Obviously, I want to hear consistent growth. That they're positioning everything to work. Every quarter. So, but it's not a perfect world. It's a growth story. The demand's there, and I would rather have them, have all these pending orders and be short supply than having a warehouse full of goods that no one's buying. So we'll see. This might actually create an interesting opportunity with a potential dip, just with a lull in, maybe any news or them just building infrastructure, which could give you a really good DCA and kind of a layering into a position for the big boom that might be in the fourth. So yeah, very interesting. Call's kind of short, which maybe there isn't a slide deck because we haven't really gotten into like some specifics on any like deals or drone dominance stuff, or company integrations.
But their slide deck, traditionally, if you compare it to someone like Power Us or Ondas, it's going to be showcasing a lot of different products and things like that. I'm sure Unusual Machines has to sort of kind of be circumspect with all the with what they're producing and how many they are producing and all of that being kind of high level, closely guarded kind of information for the time being. So, but I was just
doesn't look as cool.
Chart. What's that?
It doesn't look as cool either. It's like, hey, look at this motor versus, hey, look at this Iron Drone autonomous drone system.
Exactly.
Yeah.
But I'm just looking at the 1 year chart, and I mean, we had a nice big gap up there, right? But boy, it's filled it, and it's looks great. Like it's charging right up into earnings to continue that overall uptrend. The 3-year chart doesn't look bad either. I would,
Yeah.
they might be able to make an argument that what they've done with this, just heard him reference that stair-step financing strategy, that this dilution event that is the headline was actually already priced in. We've been telling you guys over a period of time that we're financing to build out and build up, scale up to meet this demand at the moment and the way it's all happening. So it fits the thesis that I see across the industry.
Yeah.
Going
Yeah, I don't think we haven't had to dilute 0-hour group investors yet, though, right? Still
Right.
going strong on that 0-hour group private stock price. Yeah.
Yeah. Nothing but founder shares here.
Yeah. Ticker ZHG coming soon. Make sure
Yeah,
you guys are first on the line.
GHGN. We appreciate everyone too. Wow, we got a lot of folks are tuning in. I appreciate everyone turning us on and giving it a listen. Like I said earlier, I hope we can make it worth your while. And just thanks for tuning in. This Unusual Machines is, I think, really, there's a lot of companies going to be producing a lot of things for this whole national effort for the military and government and the ultimately big prize, the commercial build out at scale of the different machines that are going to be needed. But
Yeah.
wow, it's really exciting to see so many people interested and tuned in. JT.
It's a hot stock and a hot show. That's what we're calling it today.
Right on.
Yeah, absolutely. People want to watch with us, and we're glad they're here. Let's get back to the show and finish off these questions. I'm sure the analysts will ask some interesting stuff. But yeah, overall, decent earnings call so far.
Yeah.
And then I guess too on kind of the counter UAS market, because I think that's just as hot as the FPV drone dominance market.
Yeah, it is.
How many customers are you guys working with in that space?
I am not sure at the number right now. It is definitely more than one already. And some of the same customers that are FPV customers buy the same parts for
At least
counter
one's
drones.
Ondas.
So I would have to dive into that specifically, but it is definitely a major driver for us. And the first customer that we announced that we were doing it with, where we're the furthest along, was Power US. And they were the first ones to start to see launch contracts. So now that
Who's that?
other companies get
Yeah,
counter drone
that's
contracts,
Michael Shinsky
we'll have better granularity on
and
that.
company.
Probably in another
yeah.
month or two as they finalize their supply chains.
Check out our interview with
Okay.
Power US, guys, if you haven't.
And then
Power
just
Us.
was curious on the pricing
that dropped
environment.
yesterday,
I think
right?
historically
Yesterday
you
afternoon.
guys have just tried to, for
Nice
your
work.
customers,
You and Zero
maintain
did great.
pricing, but
Yeoman's work.
I've just heard just due to the really imbalance of supply and demand, definitely is an environment that favors you. Just curious of how you guys have been thinking about pricing of components this year and next.
Yeah, I think we could absolutely increase our pricing to drive margin, but we view our company and always will as competing in the global marketplace. And so our customers very often have had overseas suppliers, and they're being forced to switch. And we really think it's important for us to be understand their cost sensitivities as well, and be a place where they can switch and not break their downstream costs or make products that are too expensive for the American people. So we try to combine the looking at it to have a 40% gross margin, so we have a healthy business, but also being price competitive to imported motors from Taiwan or Japan or China, so that we don't break their downstream model. So we're not looking to use this moment to create margin expansion at the expense of our customer. We think if we serve them really well, then we'll have a multi-year relationship with all of them and be able to provide them with the parts they need at a competitive price so they can compete.
Love it. Build those relationships.
All right. Well,
keep that revenue
guys, thanks
coming.
for taking my question. Again, keep up the great work.
Thanks, Austin.
Love it.
Thank you very much. Our next question is coming from Josh Sullivan of Jones Trading. Josh, your line is live.
Hey, good morning, Alan, Brian. Congrats on the big ramp here in quarter. Just wanted to get some additional thoughts on working capital positioning now and where it might need to be next year as this ramp really comes through. And then where are the supply chain stress points currently for yourselves?
Yeah, so if you look, this is a great example. As Brian had mentioned, we have about $42.7 million in inventory, raw material, finished goods, prepaid inventory, and that's on a $16 million quarter. Multiply that by 4, you're at $60 million. I think have historically said we always expect about 1x working capital to forward-looking revenue. So, I think that is in that ballpark. It matches sort of our baseline models. As we go into next year, I think we're going to be seeing still a year of forward-looking revenue in there, and we've always said that we aspire to do about $250 million of revenue if possible in 2027 if we're successful and don't run into hiccups. So we think we're going to need to land around there across the next year. I do think as we scale into that, there are options that are not equity financing, right? There's loans, et cetera, that could be possible. And then hopefully that answers the first question. And do you mind repeating the second question so we have it on record?
Yeah. The second one is just curious where your stress points are in the supply chain at this point.
So the stress points are everywhere. If you look, electronics vendors across the board, and this is especially true because you just saw yesterday China make drone export restrictions harder, and it's a very dynamic environment where the sort of isolation is creating regulatory changes. So if there's even, you could say like on an F7 flight controller, the only place where they make the OSC chip is out of China. So working around that is more expensive if you use a microcontroller to program it, and then you have to go find it. We've had to place orders for Sony sensors already for cameras that won't even be delivered till December because there's a shortage of camera sensors that are outside of China. If you look for magnets, we have to order 9 months out for magnets from Japan as we scale our production line and do design where magnets from other areas can be shorter. So there's probably 20.
He's bringing up a lot of the the component bottlenecks right there. He just brought up magnets, and we just finished talking a good bit about that Sunday night, and then on part 2 Tuesday night with MP Materials at at the center of a lot of what Jeff Gable, our guest over the weekend, pointed out. They were one of the sponsors there at the presenters on the panel at the Commercial Drone Alliance. Alan just pointed out needing magnets from Japan, and I think they're going to be discovering lots of vulnerabilities as they really dig into these supply chains. It's been a long time coming with all the integration of companies and products and services and the way these things have evolved and developed over the last 20 years. So a lot to unravel, to meet the requirements of the NDA stuff and the government requirements across companies, whether they're commercial tools and commercial products or going right into the military and the government pipeline. It's kind of like no distinction here that they're making, and so there's quite a disruption and quite a lot going on to adjust and get ready for. Because there really is no alternative, folks, right? This has got to and going to happen. So it's quite a challenge for the folks like that are sitting in Alan's shoes on this whole supply chain realignment that's going underway.
Because the supply chain before was China. I mean, China was leading in the drone race in terms of they were creating all the drones. They had the infrastructure in place. Geographically, they have rare earth materials that they need over there. I mean, China's situated in a spot where they're getting a lot of that. They're a main exporter of a lot of those things. And we didn't have any of this infrastructure in place now, which is what we're building out. So obviously, there's going to be growing pains. Obviously, things with rare materials. That's why we invest in LightPath, right? Because that's a replacement to one of the rare earth materials in germanium. But they got to figure out, a whole new supply chain. That's like outside of UMAC, right? That's outside of their control. Is they got to figure out, as a country, as the U.S., where we can actually get, these magnets and things like that. So you had mentioned Japan. Maybe there's some deals with some materials, from China, but I'm sure at a lesser rate. But definitely going to be some growing pains.
Down though, they're not going to let them, replace them.
And the demand's just increasing, so there's going to be a supply shock for sure. So it'll be interesting to see kind of how they get around this. But I mean, what were people kind of expecting though, right? This was working this way for years, right? Decades. I mean, China was has been and is still the biggest exporter of just drone parts. They can make them cheap. They can mass produce them. DJI controls the majority of the international drone space. So obviously there's going to be growing pains, and I thought that was interesting when Alan was like, yeah, what's the pain point right now? What's your stressor? For he's
They're
like everything.
everywhere.
Yeah. It's like, hey, that does make sense, and that's why they're working on getting in early, right? I mean, getting the ground floor
Right
set.
on, man.
That's why you saw Ondas, investing in PW in UMAC, right? Because they know that there's going to be a supply shock. They knew that. They knew they needed to try to get all these things in place before, because you're going to have all these other drone dominance companies, right, come knocking. They're like, oh, we have this amazing drone. How many you can produce a month? Like 30. That's not going to work. So they got to have these things in place.
3,000 won't work. I mean, this is really gonna. This
Exactly.
Is gonna be something by the time.
And premeditation needed to already be kind of in consideration, right? You already had to have these palms greased, the connections made. You can't do that after the fact because the infrastructure is not here. And with these new NDAA guidelines and the FCC, adding a lot of these Chinese component companies to the covered list, it's not going to be as easy as it was to get these things. And now I think some people are going to have a rude awakening. So we'll probably see companies like UMAC benefit, Ondas, Power Us, things like that.
Yeah, it's actually pretty very reinforcing. We were able to meet the folks at Power Us and really learn a lot about them and their company and their vision. And then to turn around just a few days later and hear them mentioned in a call on a company, right off the bat in the first question.
That was cool.
And to know that Ondas has also been involved with investing in unusual machines. The flip side of that problem or whatever this challenge over the supply chain realignment is that they're all in the same boat, right? All the competitors and cooperators alike, where they're all in the same boat. So it's an industry wide. Multi-sector challenge that it behooves everyone to get solved and find, make the innovation happen that will help solve these all these challenges to maintain and to keep us and put us where we need to be going forward. So everything was encouraging about meeting the stakeholders, the heavy hitters, as Eric called them, from all sides of the table that were at the Commercial Drone Alliance. Now we're right here in the heart of the earnings season for the companies that we cover and are watching. So man, this is it's just nonstop, man. Ready to keep going. I'm excited, man. This is fun stuff.
Me too. I could talk about like 6 more things. We'll finish the questions, and if we hear anything really interesting, we'll pause and we'll do a further little discussion after. Appreciate all y'all watching with us today. Great to see you in the chat. Great to see the chat active this morning. We got Zoo, we got Ron, we got Gecko, we got Hannah. Appreciate all y'all coming in. If you got any questions about the call, make sure to put them in the chat. We'll get to them at the end. Or if you see any insights that we missed, hey, let us know. All right, guys, let's continue with these questions here. Thank you again.
Different, very challenging items to source where our supply chain team is on top of it and does an incredible job. And those are just some I know off the top of my head. And it gets harder as the rules are changing on short notice.
And then maybe just one last one, just follow up on the counter drone market. What do you think the magnitude of the counter drone market is going to be versus the legacy FPV market?
So I think the counter drone market is probably going to be larger. And I think it's going to be larger because I think counter drones will be used more. I think there's a lot more global defense activity, and I think a lot easier U.S. export for defense activity. I'll give you an example right now in Iran and the Middle East. The Gulf states all would want counter drones in addition to things like Patriot missiles. And I think it's a lot easier to say, hey, here are counter drones, where then we're not facilitating or engaging in a conflict. And, I think if you look, there was a great effort done by the government during FIFA with a full drone task force. And I think you're going to see the same thing with the Olympics, et cetera. So I think if you think the counter drone and the small attritable drone markets are the same size, I think you're going to see more routine rollover and deployment in the counter drone market. And so I think that's going to be a more consistent demand driver
big
long term.
category.
Great. Thank you for the time.
That's
Thanks, Josh.
Defend and Ondas with Centrix for
Okay,
those
thank
CUAS
you
at
very
World
much.
Cup.
Our next question is coming from Craig Irwin of
And
Roth
they probably
Capital.
were using that
Craig,
to try
your
out
line
others
is
that we
live.
don't know about now. You know,
Good morning, and thanks for
I
taking my
was-
questions.
we had
So,
to-
Alan, it's rare for a growth company to have, a double in revenue and for margins to hang in there. Usually there's fairly substantial margin compression when companies are scaling. And, you've delivered the opposite despite some of the challenges that you had in the quarter. Can you maybe give us a little bit more detail on your planning for scaling as far as how you allocate resources for, employees, hiring, infrastructure necessary? How are you actually delivering on margins that are healthy and expanding modestly while scaling at such a rapid rate?
I think that's a great question, and thank you for the observation. Everybody in the company cares about building a sustainable business. I think where you see a lot of companies reduce margin for growth, they have to create demand. And as we've always talked about, there's a market vacuum here, and so our costs to create demand aren't the same as other emergent environments. And so we have the benefit then of being able to understand and build with discipline to maintain and grow those margins. Our goal and our belief is that we're going to be able to be operating cash flow positive in the new year. Now, again, as I mentioned, for the third quarter, we're putting in a ton of work. So right now we were at about 70,000 square feet of total space. And we've added 15,000 square feet in Orlando for batteries, another 4,000 square feet in Orlando for operating staff, like overhead staff, G&A. The 18,000 square feet for upgrade energy will close, and we're actually looking for another 100 to 200,000 square feet over the next 9 months, because at our current rate, we've sort of filled up the space that we have faster than we expected. It's all being operational, and it's all generating margin. The other thing that is true is everybody on our team puts in the work. And so I think when you look at gross margin expansion, a lot of our gross margin costs come from labor, and people are really efficient and work really hard. And I think we have an incredible workforce that has helped us achieve that. So those are the two pieces that I think have let us do that, is not having to spend wildly on demand generation, and then a really effective workforce with a senior leadership that has an attitude toward constantly building a business with profitability. I think one other thing to note, and this will create a changeover in 2027, most of our loss is driven by equity comp. Myself and the senior executives are no longer taking restricted stock. We moved to options. And so I think where you may see some more gap stuff in the third and fourth quarters, by 2027, a lot of that gap loss will be ameliorated, as we all believe in the future and are structured for growth.
Thank you for that. So another major item that wasn't specific to UMAC this last quarter, but specific to the industry, was Performance Drone Works getting their conditional loan commitment. That's $820 million. That's a big amount of money for the Department of War to commit to the build out of this infrastructure, this industry that you are clearly a leader in. You were obviously mentioned, your company was mentioned in several of those press reports that talked about potential government investments. So I don't want to ask specifically about your status there, but I'd love to ask about how you could potentially use money. If you did have a couple $100 million come in, what would this mean now that you've proven that you can use your capital wisely?
Great question. I'd like to say congratulations to the PDW team. I've known
That's a good
Ryan
question.
and James and Matt over there since the early DRL days, and they're great stewards of what they're doing. I think they're a great company in the industry. What we would do, what we could contribute, and is very shortly we're going to have a complete, let's call it motor production unit, a full supply chain, a mid-tier introductory line with the ability to do things all the way through a high volume line where we could do, let's call it 100,000 motors a month. With hundreds of millions of dollars, we could take that production unit and parallelize it. We could rubber stamp it out and adjust it to match. So if there was the desire to do 1 million motors a month to support the drone and counter drone industry, we could take that base unit, which was confirmed and validated, along with a full supply chain and the variants that we have there. And at this point, we could stamp out 10 of them. And I think in that way, with our leadership position in motor production and our quality improving through strong partnership and feedback with our customers and the hard work of our team, I think that's where you would see us go, and what you could see us do with, sort of a mandate that it would be desirable.
Excellent. Well, congratulations on the strong progress. I'll go ahead and hop back in the queue.
Thank you, Craig.
Thank you very much. Just a reminder, if you would like to ask a question, you can still join the queue by pressing star 1 on your phone keypad. Our next question is coming from Amit Dayal of H.C. Wainwright. Amit, your line is live.
Thank you. Good morning, everyone, and thank you for taking my questions. Just to begin with, did I just hear the targeted revenue for 2027 is roughly $250 million?
That is not guidance. We've said all the way along that is the available TAM from the Drone Dominance program. And so we are aggressively trying to grow our company to fill as much of that demand as we can.
Understood. Just so in that context, what revenue capacity will your manufacturing infrastructure support going into 2027?
I would say as of today, with the 70,000 square feet, we're probably getting close to the limit. So that's probably 20 million. We'll know better when we put in the high-speed automated line, but we're actively looking for another couple 100,000 square feet to scale out. So we're trying to build the infrastructure, and that's really what Q3 is about, is that foundation. We're trying to build the infrastructure to meet the market potential of $250 million in 2027. And we're going to, have to take a moment and really build out the base to be ready to do that.
Understood. Thank you. And just any update on, the announcement in May or the news in May about potential U.S. government investment in UMAC? Has that discussion moved forward? Any update on that would be helpful. Thank you.
The previous analyst just asked that.
Yep, as I've said all the way along, we are in discussions with the OSC, and that's all.
I don't think this guy was listening to the call.
Right.
Okay. That's all I have, guys. Appreciate it. Thank you so much.
He's a one-trick
Thank you,
pony guy,
Amit.
man. They write a
Appreciate
question
you.
down, and they're just waiting in line to ask.
Thank you very much.
Right?
Our next question is coming from Barry Sine of Litchfield Hills.
But
Research.
they're all
Barry,
thoroughbreds,
your line
racing
is
with the
live.
blinders on, man.
Hey, good morning, gentlemen. Couple questions, if you don't mind. First, Alan, you've been incredibly busy on the M&A front. If you look back at the stack now, number one, if you look at the components required to manufacture a drone, you pretty well filled that out, especially with batteries recently, maybe frames or antennas. Anything else there, and anything else you might go beyond, just drone components? You've thought about services in the past but pulled back. What are you thinking on M&A?
Right now, we're really focused on closing Upgrade Energy. And then when we look at M&A, integration is a lot of work. We don't take that lightly. And I think until we have scaled to service what is the powertrain that we're working on, and we feel more comfortable that we're there, that we're really focused on driving this organic growth that we saw, in the last quarter. And I think our team's demonstrated we can really start to drive rapid organic growth. So we're always looking at adjacencies or at new product categories. I think with where we sit in terms of capitalization and support from the shareholders, we're in a position that if something makes sense, we could go after it. But at the same time, our core focus right now is getting batteries in-house and really scaling what we have because there's a lot of demand for it.
Okay, so it sounds like you're in pretty good shape for now. Shifting gears, talking about gross margin, there's a lot of work in progress. You're ramping up the facilities now, but you're going to do a step change increase in square footage next year. You've got to get batteries closed and up and running, and a mirror plant in Orlando. If we look out, once that's done, I don't know if there's a steady state ever for Unusual Machines. What do gross margins look like longer term on this business? Are we at 50% gross margin? What should investors think about that you can do once you're really at scale?
I like that question.
Yeah, I think what we've said is why we're scaling. We figure, around low 30% gross margin is our target. I think we've demonstrated we can hit that. I think that's what you're going to look at as long as we're scaling. We're doing everything we can structurally to keep 40% gross margin as we start to flatten out as our target, which we think is fair to both us and our customers. I think once we get there and we don't see the growth that we're seeing, if we settle into 10% year-over-year growth or some really mature state, we'll have to look around and decide then, do we need to expand into other industries to drive continued growth, or do we need to look at margin improvements? And I would say very recently, the FCC just put out another ban, which creates potential TAM expansion in that they banned all light show drones immediately. But more importantly, they banned humanoid robots and even robot vacuums from being imported to China. So if we see a components ban in those categories, which would follow the same pattern as the drone marketplace, there are millions of robot vacuums that were sold in the U.S. last year, and right now all of them are made in China. So there could be, we would have the choice to pursue margin expansion or continued TAM and revenue expansion at that point. And I think when we get there, investors should be excited that we have decisions we get to make.
And just lastly, just a detailed question. What percent of revenue was Rotor Riot this quarter?
The retail channel, not the brand, was only about 6% of revenue.
Great. Those are my questions. Thank you.
Thank you very much, Barry.
Okay, thank you very much. Our next question is coming from Matthew Galinko of Maxim Group. Matthew, your line is live.
Hey, nice results, and thanks for taking my question. Alan, you framed the market as supply constrained through 2027. So is that a function of line of sight that you have today, or do you expect suppliers to catch up with demand in 2028?
Just line of sight. I think there's no suppliers that are close, and the continued regulatory environment is restricting supply further. And so I think, we'll continue to pay attention, and Q2 2027, I think we'll have better line of sight looking forward. But right now, that's just as far out as we can see.
Great. Thank you.
Thanks.
Thank you very much. Our next question is coming from Josh Sullivan of Jones Trading. Josh, your line is live.
Hey, Alan, I just wanted to get your thoughts on the evolution of the commercial drone delivery market at this point. I know you already have a lot on your plate scaling into drone dominance alone, but given the longer-term battery swap opportunity, just wanted to check in on your thoughts on any developments you see.
Yeah, I think, most importantly, you saw DoorDash just got their 135. They'll begin testing. I think they're going to have very interesting results, and that'll be, my belief is food delivery is going to be the first thing that unlocks with 108. And so I think what we see from them publicly in terms of how customers are reacting to their early testing with the 135, I think is going to tell us a lot about what to expect from that market. I do think that you're looking at drone delivery being constrained in terms of developing new products by the FAA finishing the regulation for Part 108. In particular, the sort of detect and avoid requirement, because if it requires an antenna and a radio, et cetera, then any companies building drones for that next FAA cycle won't be able to launch them until after they can qualify them. So right now, my guess as to the scaling of the component demand for delivery is going to be probably late 2027 with deployment. My guess is in 2028. And I think food delivery is really the first use case that's going to scale. And so I think it'll be really interesting to see what information DoorDash shares over the next year to give us really good indicators of what that market's going to look like.
Great. Thank you.
Thank you,
Hey,
Josh.
JT, I don't know. I know we're a
We
little bit
appear to
delayed
have reached the
because
end of our question and answer session. I will
there we
now
go.
hand
Closing
back
statements.
over to
Hold it
Alan
just
for
for a
any
second,
closing comments.
because we're I
Yeah,
know
again,
how far
this
behind we are.
this
We're a
quarter
little
is
bit
the
late,
one where
right?
I
Because we're pausing some of these with our reactions and analysis. I just watching the chart on unusual machines, and I don't know if they've closed the call out, and then all of a sudden they've got some market makers doing their market making activities. But yeah, it just took a nice little not just took a little dive here in the last 4 or 5 minutes. I wonder if it's something come out in the call that's up ahead of us we don't know about yet.
No, it was
But
down like
yeah,
10%. I saw that too. It was like
yeah,
3.5, then just dumped to 10. I mean,
yeah.
it's not a crazy stock in terms of volume. So yeah, if there was big order
Right. There
block
you go.
sold or
Good point.
something, it could
Good
be a
point. And we
dump.
are half an hour away from opening.
Yeah,
So,
I'm thinking
but
maybe it could create a nice buying opportunity though. I'm gonna be watching it because if it's if it's a quiet third quarter, we could see some retracement and a little pullback, and then we could look
mhm.
for a nice position, layer that in, maybe around like the 15, $16 mark would be for me kind of my target of where I'm trying to get in. That we saw a lot of support at that level, and it went back up to 27. So I'm already positioned long, but in terms of like trading it, yeah, I'd probably
Yeah.
be looking for that. Or if I was a new investor, when I'm like, oh, UMAC looks good, yeah, I'd probably want to see a further pullback because right now it's trading pretty rich. I mean, up 100% year to date. It's pretty expensive for buying in.
Yeah, no
Um,
doubt. No
we
doubt.
got a comment from Jeff. Jeff, how are you? He said, Zipline also posting videos this morning about expansion, waiting in the wings of 108, which is
Nice.
regulations
Yeah,
108.
yeah, and that's exactly what Alan just brought up as far as you just mentioned DoorDash. They were also at the Commercial Drone Alliance. He just mentioned he felt like that was going to be the first thing to unlock this food delivery,
Yep.
and I don't doubt that at all. This so quick and convenient, and they've been practicing that in places. I think they got a good handle on it wherever they'll be allowed to do it. But hey, thanks for tuning in, Jeff. Really appreciate you helping us out and being a part, participating in Commercial Drone Alliance 2026. Already looking forward to next year. We've gotten a lot of good feedback, and yeah, just promising bright things happening for everyone all the way around. It's so interesting. And anyway, just want to say thanks for tuning in, Jeff. I appreciate you being there.
Yeah, absolutely. Love having you on the show, Jeff. Hopefully we can have you on again soon. And we'll definitely see you at the next event in person.
Yeah, we're up to almost 100 just on Substack. It looks like, man. That's not too bad.
Yeah, that's from yeah, around 100 people watching on X, YouTube, mainly. It's our main sources. We'll probably expand to some other ones. I believe that was the end of the questioning. So yeah, pretty good call. What are your thoughts, Benny, on just the overarching call itself?
I mean, very, very encouraging. I think even with this little drawback, pull down dip, in the pre-market this morning. I mean, even combined yesterday and today, we're looking at 10 or 12%. That's not a dilution event. You lose 30, 40, 50%. In 24, 38 hours, or who knows if that happens here, but. I think they're making the right steps. I got a lot of confidence in them because of people like Power Us having confidence in them, and Ondas having confidence in them, and just the entire situation in the industry and the way things are maturing. And really, I think we're starting to climb that middle part of that S curve. I think here in a significant, meaningful way. And man, we're right in at the beginning, JT.
Yeah.
On most of heck, Power Us is not actually even trading as Power Us at the moment. They're still waiting on the last regulatory hurdles, and probably lining up a date to go up there and ring a bell or something. On the opening.
Yeah. I mean, while we're on Power Us for a sec, they were mentioned on the earnings call. Quick plug: we did an interview at the Commercial Drone Alliance Leadership Summit with their CTO, Zib Maram. So if you guys want to see that, check out the Zero Hour Group YouTube, Substack, or X. We got that article, 45-minute article, or live interview, I should say, posted out over there. So make sure to check it out. It's very interesting. That company is definitely coming up here. I think it's maybe off a lot of like these Ondas investors radars or drone sector radars, and it probably should be on there because they're doing a lot of stuff. They're landing some pretty sizable contracts in the 60 million mark, 90 million mark, things like that. So yeah, definitely check them out. But yeah, overall, I like the call. It was kind of a quiet call, but that's not a problem, right? I mean, I liked what I was hearing. Obviously, there's constraints with supply chain. But the goal right now is to create that supply chain. They're going to be working this quarter to kind of scale up infrastructure because the TAM, the addressable TAM, or total addressable market for those that don't know, is quite large at 250 million for like the drone dominance program. But they don't have the infrastructure to actually cover all of that yet. So they're working on covering as much of that as they can now with facility scaling, with that the advanced supply line in the facilities, and a couple other things. So maybe if they get an investment in the government, it'll be easier. So that's always a potential positive catalyst. We could see that will just boost the stock to $50 or something, right? But that's not something we can count on. So overall, looks really good. Maybe we'll get that dip here to actually get a position. And then 2027 is looking bright. So I enjoyed the call.
Yeah. There may be a closing statement yet to come.
Oh yeah, you're right.
Alan. You might check that out then.
Let's check it.
Gone from hoping to believing. It's because of the team and the energy that everyone's put in and our ability to rise to the occasion. I think we're extremely well positioned going forward. And I want to say thank you to everyone for their time. I appreciate everybody that's a shareholder. And I look forward to working with everyone to continue to build the drone industry. So thank you. I hope you have a great morning.
Maybe not.
Thank you very much, Alan, and thank you, everybody. This does conclude today's conference call. You may disconnect your phone lines at this time and have a wonderful day. We thank you for your
short and sweet, actually. The presentation, no slide deck that we could find. I know I think the numbers were probably released, right? But nothing fancy. This is us. We got to go back to work.
Yeah, absolutely. I mean, it's not like the end system drones, right? It's not like a sexy thing. It's all just components, parts. So I always like a slide deck just because I think it's nice. For groups like us, right? We love a slide deck because I love to have something we can show on screen, something to watch, something to comment on. But in this case, we didn't have that. That's fine. I love commenting on questions in the chat. Hey, we got about 100 people on here right now, maybe even a few more. If you guys have any questions or insights about this call, now is the time. I'm going to give about 2 minutes, I think, Benny, for that. And then if not, we will close it out today and get back to work. We got a lot. I mean, the Zero Hour Group is expanding so fast. We got a lot of work, guys. We got a lot of things going on for you behind the scenes. You're going to love more interviews coming. Make sure you check out the Power Us full-length interview that I already mentioned. And then we got another one with Honor Technologies, that full one's dropping, and also our interview with Kate Jones, which is going to be multi-segmented because we just got so much good info out of that. You guys are going to absolutely love it, especially if you're a history enthusiast and drone sector advocate. So yeah, I'll give a couple minutes for some questions. And Benny, how's your morning going? How's it going?
Fantastic. But you're right, just completely slammed. I'm just been finalizing the latest of our travel plans, but wheels up again this week.
Wheels up.
We'll be coming to you from Boston on Sunday night and Monday. Copen Technology or Copen Corporation has a technology demo where we're going to get an up close front row seat, actually a tailored presentation that is normally reserved for the institutions, for the Maxims and the Lake Streets and the Canaccord Genuity crowd stakeholders. But for the retail investor stakeholders, we've got a seat at the table, and we're going to get the very same presentation and up close look at this technology, try to understand where the real advantages are. I'm most excited to learn more from Michael Murray at Copen about the interconnect technology, where they're going to be using the photons instead of electrons for the higher transfer, bigger amount of data, doing it faster without the heat, more efficiently for this data center build out. That's a whole nother area that's a matter of national security. All of this autonomy stuff, it runs off of a data center somewhere.
We're getting the slide deck for that, man. You start talking about photons and electrons. Science was not my strong suit for subjects in school, so we're gonna need the slide deck. It's funny. Most of my friends are engineers, ironically, but no, I like the numbers. I like the the research.
Well,
that's funny.
A former boss of mine asked me what I knew about electricity, and I just not much, except I know it hurts, boss. Turn the light on though, and you can see. And this idea about moving that data between chips inside the servers, between servers in a stack or a rack, and between those racks. We've already used light, in the fiber optic cable to move it between the data centers and the beginning, middle, and end users. So why not add that speed and capability inside the data center, reduce the heat load, reduce the demand on natural resources. We need this copper in the drones. So you can't make the batteries make the motors work with a fiber optic cable in that drone. So let's reserve the copper for where we really need it, and use a better, faster, cheaper, and for our investors, higher margin product, straight out of, man, this is high tech stuff. Well, I mean, it's Star Wars, it's everything, it's happening in front of our eyes. But that's what I'm most excited about with Copen, is that interconnect technology, just blowing their TAM wide open. They've been for 20 years, with the same customers in medical, and a little bit on the virtual reality side with the consumer headset devices around. But primarily a government vendor and contractors supplying their products. But to be able to work with Fabric AI and penetrate this data center build out market, boy, that is really a huge potential for that to blow out. So that's what I want to see up close and hear about up close. And it'll be my first chance to meet Michael. You met him back in Minneapolis a couple of months ago.
Yeah, no, Michael's absolutely awesome. Very, very excited for you to meet him and then check out the facility. And then, so we're wheels up next week. And next thing, we got to be wheels up down to Florida to check out the Unusual Machines and Lightpath, manufacturing facilities as well.
They're all down there, it seems, right?
That's next stop.
Ondas, and I think that actually Power Us has got some things going on in Florida as well. So
Palantir's down there too.
Yeah, Palantir, that's right. Alex, we're coming. All right. Yeah, leave a key under the mat.
After that earnings call, we definitely gotta.
We just did an interview, and right there somewhere in the C-suite with you and someone on your team. That'd be fantastic. I think it's coming, folks. A lot of folks we turned some heads at CDA. A lot of people are taking notice of our audience as much as us, because this is what it's all about. Is you guys, both from our perspective and the companies we cover. So really thank everyone for tuning in, and
went from about 10 people to over 100 per stream now, so over a month or two. So yeah, but definitely growth. We appreciate everyone watching. You guys are making this possible, and just know a lot of cool stuff is coming. So didn't see any further questions in chat, Benny. So I think we'll call it here. So yeah, everyone have a great day, and watch the content, at 0 Hour Group at HGR. If you kind of want to plan for what to do with UMAC in the interim, we'll definitely be watching it for key levels and the pullback. So yeah, thank you guys for watching with us. Good call, and we will see you guys in the next one.
Right on.